Good morning and welcome to The Street on BNN Bloomberg. I'm Roger Peterson. Thank you very much for joining us. Coming up on the show today, Paul Harris, portfolio manager at Harris Douglas Asset Management, is our guest for the hour. And we want to hear from you this morning on First Call. Reach out with your questions on stocks, and we'll have Paul answer as many of them as he can at the end of the show. The number to call, 1-855-326-6266. We'll open the phone lines in about 30 minutes. Our email address is firstcall@bellmedia.ca. Now, some of the stories we're tracking for you in the BNN Bloomberg newsroom. The U.S. Congress has passed legislation to end U.S. President Donald Trump's tariffs on Canadian imports. The vote marks a shift for the Republican-led House as concerns around the midterms loom. The U.S. president, though, is likely to veto the bill, making it unlikely for it to become law. TELUS says longtime CEO Darren Entwistle will retire in June, with former CIBC CEO Victor Dodig set to take over. The leadership change comes as the company reports fourth quarter revenue and earnings that came in below estimates. Despite the miss, TELUS issued a positive outlook for 2026. Profit in the fourth quarter came in above expectations for Bombardier. The aircraft manufacturer is coming off a recent $1 billion deal with Vista to sell more than 40 aircraft over the next decade. Looking ahead, the company forecasts more than $10 billion in revenue while delivering more than 157 planes. Despite currently not facing any U.S. tariffs, the upcoming CUSMA negotiations could have a significant impact on the company. And now our top line story. Donald Trump's tariffs policies suffered their strongest political blow yet, with the Republican-led U.S. House passing legislation aimed at ending the president's levies on Canadian imports. Let's bring in our guest for the hour, Paul Harris, portfolio manager at Harris Douglas Asset Management. Paul, thanks as always for joining us. There's not much that's going to happen with this, right, but how do you interpret what happened?
Well, I mean, I think it's a real sign that people, a lot of Republicans are worried about what happens in November of this year when you have the midterm elections. And I think that they are seeing, especially kind of states that are very close to Canada, seeing a lot of issues with tariffs, right, that are really dependent upon how we flow trade traffic back and forth. And I think that's the bigger tension. And I think these people are really quite worried that, especially with, there's one thing to have tariffs in some other place, but we've had this strong relationship. We've had a free trade agreement, NAFTA, and it's the USMCA as well. So I think people are very concerned that, especially in Congress, that kind of the issue that he uses also to tariff people is not something that we have with Canada, right? It's not an emergency, any of those other things. And so I think that it's much more a reflection of, I think, where people are feeling the pinch of the next little while, and especially in those areas. And I think the Congress is really, worried that they're over the next little while, it's going to be very difficult to win the election in November. Not only because of this, but sort of other issues that are going on, like border issues and stuff like that have gone on with the U.S. So I think that it's just a reflection that things are sort of, the tide is slightly turning against Donald Trump, where Republicans are really looking at it and saying, well, this is probably not something that I want to be able to talk about with my
not a hill to die on.
Yeah, it's not a hill to die on, right? I mean, I think that we've had a strong relationship with that country for such a long time, and we do consider ourselves this friendly border that we have. And the NAFTA, it was good for everybody. Or USMCA was good for everybody, right? It wasn't. None of these things are ever perfect. Obviously, somebody gives up something to get something, but the reality is that it was a very good deal for everybody, and we're really intertwined with the United States when it comes to stuff. And so Carney's speech in Davos was very telling, because he's really feeling this kind of rupture that's gone on, not only internationally, but just domestically with the United States and how we are being treated, right? So I think that it is a rupture, right, if this continues.
And it will make for some interesting negotiations, because you have the cracks showing in the Republicans. You've seen a few move over and vote in favor of this because of the impact it's having on in their states. And then you've got Trump musing that maybe we don't need CUSMA,
right.
and we'll negotiate individually. I saw an interesting set. I can't remember the exact numbers, but a large percentage, there are reports that they're undocumented of CUSMA items that are going back and forth across the border. They're not officially CUSMA, like there's no,
right.
And I'm wondering if that's something that in the end, that's what Trump may push for, is that he wants complete CUSMA documentation, and we end up with an agreement, because I think most Americans agree it works for them as well.
Yeah, you're probably right. I mean, I think it's not like it's never, like I said, it's never, these things are never perfect, but it was a well-negotiated agreement. NAFTA was, so was CUSMA. And so I think that the issue for me is that, we're so intertwined on trade and a lot of other policies that not doing it is going to be far more detrimental. And I think that Republicans are realizing that, whether they're inflationary or not, or all these other issues, it's not an issue, I think, that you want to have with Canada. Right? Yeah. It just doesn't make a lot of sense. And so I think that that's where you're seeing the cracks. And I think that, yes, you may want to negotiate it. I mean, one of the things you wanted to negotiate is renegotiate it every year. Like, that's a crazy thing to be doing, right? I mean, the idea behind
it's already every 5 years, right, which is quick enough, really.
Yeah. So once you sign the deal, you'll be going to renegotiate it the next day. So I think, like, this is the whole problem. Like, yes, we need a trade policy with Mexico, Canada, the United States. It really works well. Yes, the U.S. gives up something, but so does Canada. Yeah. Like, I mean, it's never fair, but it's negotiated to be as good as it possibly can. Uh-huh. And I think so. I think I think Republicans are realizing that it was a good deal. It is a good deal, and we should continue to move forward with that. Yes, maybe the U.S. will get something more and we'll get something less, but negotiate in fairness.
All right, I want to jump to our other story that just came out this morning. It's a busy morning. We've gone from nothing much happening this week to a lot happening this week. TELUS, right, and their new Victor Dodig, their new CEO, president and CEO.
Right.
Your thought? You know him, and your thoughts on it?
Well, I mean, he was retiring from the bank and from CIBC. He was on the board at TELUS, so it's always kind of funny because you thought, okay, you're leaving this massive institution and you're going to go to TELUS. Why would you want to do that? But I guess maybe he felt that he clearly understands the business because he's on the board, which is important. Mm-hmm. Like, if it was somebody,
I was going to say, because that's a transition. I mean, so skill sets are skill sets, but that's still a transition.
Yeah. So if he was coming, I think, just from the bank and then he moved to TELUS, I think it would be much harder to understand why they would do something like that. But he was a great CEO at CIBC. I think he was really well respected. I think he knows how to run a big organization. Telecommunications is different. And also, in some ways, telecommunications, like banking, is highly regulated. So he's dealt with the government and dealt with regulators on an ongoing basis because of the banking business. So he understands how to deal with all that stuff. So from that kind of view, that he's probably well suited with that respect. Because he was on the board, he understands the business. I assume that he understands the different parts of the business and how they all work. The present CEO has been there for a long time, 26 years.
Yeah.
And so I mean, I think it's interesting to see that he's decided to do something like this when you think he was going to retire and move on. Why didn't you just stay at CIBC?
Apparently, he likes a challenge because, I mean, their earnings report just came out. Not the best. Some concerns there with that. Yeah.
So I mean, I think that the telecom companies have had a really difficult time, as BCE, which is the parent of this station, they both had a very difficult time over the last little while. Their stocks have been poor. I mean, the reality is Bell had to cut their dividend. TELUS really basically said we're not going to have dividend increases. So I think that there's a lot of other issues. I think that not only capex spending they have to maintain. I think the other big issue for them is that they have a regulator that is constantly telling them that you need to have more competition as opposed to regulating them properly. I think the CRTC's, the fact that they want to have more and more cell phone companies here doesn't make a lot of sense to me. We're a small country, right? Mm-hmm. So I think what they've done wrong is that they've not regulated these people properly from a pricing point of view or whatever, but they keep on wanting to have other companies. The companies start and then they fail and they get bought by these guys. So It's just been a terrible thing. We have enough people that are in that business today. We just need to regulate them in a more efficient fashion, I think. And I think so. I think that Victor will will do a good job because he understands the regulatory point of view. He clearly understands the business because he's been on the board since 22, I believe. So he does understands the different parts of the business. He's very knowledgeable at running a big organization and making people work together. And so I think that those are all qualities of a CEO that could probably run many different types of businesses once they understand it. So, but it's just interesting that he decided to retire and then decided to wonder what his wife thinks about that.
Maybe he didn't like his golf game that much. All right, we'll leave it there. Up next, we'll take a look at the markets before the bell. Time to see how things are shaping up on the markets. We'll start with U.S. futures. A stronger than expected U.S. non-farms payrolls report giving the market some confidence as it awaits CPI data for tomorrow. You can see all of them in the plus right now. Heading over to Asia, the Nikkei briefly top 58,000. Confidence in that new government there continues, but you can see it's closed off ever so slightly for the day. Also, South Korea's Kospi hitting record highs. Elsewhere, the Hang Seng down by 0.86%, while the CSI 300 ended up 5.12. Heading over to Europe now. Strong corporate earnings, especially in industrials and luxury, are driving the markets there. Everybody's in the green. The FTSE 100 up by 0.14. The CAC 40 up by nearly a full point. And look at the DAX right now, up by almost 1.5. And the TSX, pretty much a wash yesterday, right around record highs. You can see those down 2.64 points. Just one of those days. And looking at some of the winners and losers, Nova Gold surging 13%. Discovery Silver up by 9.5%. Allied Properties, though, their earnings report coming out, rocking them 27.83%. They were down. And Colliers also off by 11%. Heading over to the metals, and all of them in the red right now. Gold still above 5,000, but holding on right now, down 0.22. Silver off by nearly 2% and down to around 82, just a little above it. And copper is also off slightly, hovering around $6. And oil, a bit of a downward trend after some upsurge recently. It was off by 2.33%, Western Canadian Select yesterday. And WTI, how's that doing right now? It's off slightly below 65 a barrel, down about 0.29%. Well, the Bank of Canada's Governing Council is saying that recent U.S. actions on trade, foreign policy, and central bank independence are making the world more turbulent and escalating uncertainty. Our guest, Paul Harris, portfolio manager at Harris Douglas Asset Management, says that this uncertainty may have lulled Canada into some economic complacency. I'll hand the floor over to you, sir. Why is that? Why do you think?
Well, so I think there's just a general complacency about a lot of things that are going on. So I think from a Wall Street point of view or Bay Street point of view, so I think last year, April, everybody thought the world, that tariffs went up. They thought there was going to be a terrible recession and all these other things. That didn't happen. But this year, we're also more positive, right? Earnings are up, the world is going to be a better place. So I think there's this complacency that everything is going to be fine. And I think that a lot of these things take time to go through the system. And I think that you're going to probably see a much more volatile year in the stock market. And I think you're probably going to see a year where you may see it being flat or, up marginally or down marginally. But I don't think you're going to see the returns you saw in the last 3 years in the stock market.
No, I mean, those have been some pretty incredible returns.
Simply because you're also going into an election period in the United States, all those sort of things. So I think that people have to be much more aware about where they're investing and maybe being a little slightly defensive in some way or form, because I don't think you're going to see those kinds of rates of return, because we are a little bit more complacent about returns, about where the economy is going to go, where earnings are going to go. All these things seem to be very at the high end of what I would say the range, as opposed to being where they were last year, which they were all at the low end of the range. And everybody was saying, oh my God, we're having tariffs and all these other things. We're going to have a bad year. So I think that seems to have dissipated that kind of worry. And it's now more, oh, okay, well, everything's going to be fine. And I think that's going to be a much more difficult time. And so even most people, strategists, think the stock market's going to be up double digits. So I really worry that that's not going to happen this year. And I think you're also seeing this in kind of on the software side, on AI. I understand why they're talking about it. I think it's foolish, but also the amount of debt that these guys are putting on their balance sheets or off balance sheet is becoming to be, quite large. And
Chickens
I think the market
are coming home to roost.
Yeah, I think the market's kind of worried, will be worried about that longer term when you see how much debt these guys have taken on over the last little while to build out AI.
Now, you mentioned about the volatility. Is it going to be in AI, or do you feel it'll be across the board?
Well, the problem is that the stock market is so heavily weighted to those things, and so
we have seen some rotation.
Yeah. So yes, people may rotate out of those things, but the reality is that they can, if those companies start to go down, as we saw, the market will go down because there's such a heavy weights in them, obviously, and indexing has become such a large part of the stock market. I think yes, there people will rotate to other things, but I think that just as a, from my perspective at least, there's been a general complacency over the last little while from investors, right? And I think that comes back to hurt you in the
that we can weather every storm.
Yeah, that's right. Everything will be fine. We can weather everything. Look what happened. The tariffs came out. We were up. So I think people were worried about that. I'm not trying to say you're going to have a collapse in the stock market or anything like that. I just think that you're not going to have those kind of rates of return, and they may be lower than people are expecting.
So what should you be doing with your portfolio then?
Well, I think I think that there's nothing wrong with being with these companies, like whether it's some of those Mag 7. I think you just have to be slightly more defensive. Maybe you own a little bit more cash. Maybe you move into a few other sectors that protect you a little bit more, like healthcare or something like that protect you a little bit more in this environment. And I think that's what you need to be able to do. You don't want to be kind of. It was easier last year to be in all of those companies, right? So I think that maybe you want to have a slightly more diversified portfolio. I think, some of those companies, they're great businesses, don't get me wrong.
Yeah.
They're fantastic companies. They have high margins. They have great free cash flow.
Great businesses have bad years, though.
Yeah. Some great businesses move sideways for periods of time, right? So, but I think that's what you have to be worried about. And I think the debt market will have more influence about what happens to a lot of these companies than the stock market will, because if there's this feeling that they're taking on way too much debt and the cost of that debt is to insure it even gets more expensive, I think that'll be the problem, right? So I think that there's a lot of other variables around that I think that people are don't want to look at and are saying, oh well, it'll all work out. And don't get me wrong, AI will be very influential in the world and in the economy. And it will lead to better productivity and all those things. But you can just see what happened with some of those software stocks, right?
There could be some hiccups.
Yeah, they collapsed because Anthropic came out with this coworker thing and stuff like that. Oh, well, Thomson Reuters is not going to have a business anymore. Well, yes, they have a business, and they will have a business. That's not going to take over all that stuff, right? So there's a lot of those kind of things where these kind of stocks fall a lot simply because of something like that, which seems, maybe it's the greatest buying opportunity now for them. But the reality is that there's a lot of this stuff happening, and so it has a greater impact because valuations are high.
Okay. All right, well, we'll wrap it up there for now, but we've got lots more coming up on the show after the break. All right, time to see what's on the radar for Paul Harris, portfolio manager at Harris Douglas Asset Management. And we'll start off Visa.
Yeah.
Always a kind of a rock solid, isn't it?
Yeah, so Visa to me is like the 407, right? It's just you constantly pay when you go through.
Yeah.
You don't take any credit risk. The credit risk falls to the bank. Yeah, so I mean, it's had a kind of a tough time over the last little while. Last year, I think it didn't do so well. I think the stock is at a level where you should look to buy it. There are only really three competitors, but two major competitors, which is the other one is MasterCard. I think one of the issues they've faced a couple of issues. One is there's a regulatory issue about the swipe fee that they're going to have, which may affect them, but I would think they would try to settle that at court and pay out some money. That's one thing. The other thing, obviously, is the fact that there are so many different kind of technology companies that are weighing on it. But I think, Visa understands that. They've tried to buy some companies. That Plaid was one of them, but they couldn't do the deal because of the Biden administration. So I think that there's this feeling that, somebody's going to take over their network and all that stuff. The reality is that there's still growth for the company. One, internationally, people forget that, but there's tons of people use a lot of cash still. Yeah. Number two, their B2B businesses, not only the consumer business, but the B2B business is growing, where smaller businesses like myself can now pay for their professional staff using their credit cards, and then the points that you get on these cards are really important. So people tend to use them a lot more than they would previously, right? And so also access to those cards are a lot easier. You can just pay with your phone now and all these other things. So I think Visa is a good opportunity at these levels. I think that, like you said, they're not taking on any credit risk. Really, it's just a toll booth where you get paid. Now that may come down, but I think Visa understands the dynamics of the business and how it's changing. And I think they understand the fintech side of it as well, where they're looking to, be on top of where they feel their weakness is. But their network is very hard to duplicate in many ways. Right.
Almost like a railway network, right?
Yeah,
it's there and it's built.
Yeah.
AI, is that a concern for them, or are they embracing it and bringing it in?
I think all these companies are embracing it in some way or form. Like they realize that it's going to be a big thing for them. I think one of the things with AI, though, is like you have to see, for it to be really successful, it just can't be tech companies using it. You have to see companies like this effectively use it in their business. However, maybe jobs get lost or whatever. But I think that's where AI becomes much more fruitful and useful, is that when it gets embedded in sort of businesses like this, or the banking business, or an industrial business. So yes, they are using it, but you have to be very careful about using a lot of these things, right? Because there's a lot of security that goes along with using something like AI is indiscriminately will lead to a lot of security issues. So I think they're all using it. How they get to the point where it's embedded fully in their business will take a lot longer than I think people expect.
Okay, let's get on to your other two here. Bank of America.
Right. So Bank of America, I've owned it for a long time. I think this is the sweet spot for banking in the United States for a bunch of reasons. One, the regulatory environment's changing. They don't have to hold on to as much capital because they're bringing that down. So they have more room to either increase buybacks or increase dividends, which I think they're going to be able to both do. I think there's a sweet spot coming in the capital markets side, where you're going to see a number of IPOs this year, big, large IPOs, either on, like SpaceX is probably going to be the biggest one, but on the AI side as well. And you're seeing a lot of volatility. And in volatility, investment banks and trading part of their capital markets make a lot of money in volatility. So they like all this volatility. When there's no volatility, it's actually worse for them in many ways. So you've got all that happening. You've got the other parts of their business doing very well. And, JP Morgan's sort of the standard that everybody looks to, but Brian Moynihan has done a great job with this bank. Maybe he's been slightly too conservative in some ways, but I think that they are going to continue to do well. They've got one of the best retail franchises in the world.
All right.
And so I think that's great.
Okay, let's get the last one in, Stryker.
Yeah, Stryker. So Stryker is a company that makes medical devices, effectively. So hips, knees, ankles, hands, stuff like medical devices for all that stuff. It's a great little bit. It's a great business. There's a bit of an annuity in it, in my view. People are getting older, so they're going to need more of this stuff.
Not you and I, but everybody else.
That's right. The other issue is that once doctors use one of these things, they don't switch. So they tend to be an annuity because of that. There's, I think, a lot more growth internationally. They're much more of a U.S. European-centric thing, so there's a lot more growth internationally for them. And it's a great business because it keeps people out of hospitals, which is really, and off drugs, right? Mm-hmm. So if you can get these things done, there was a COVID really hurt them because they're not considered surgery that's necessary, so they're elective. But I think that backlog's gone through. But I think that they're continued to, and the other thing that's happening with them is they continue to buy, kind of what they call tuck-on acquisitions to run their business. So they've really got a great business, and I think that the medical device business is really important to keeping people out of hospital, especially on knees and backs and spines and stuff like that.
Absolutely. I'm all for it. I've got one replacement knee already, so I'm happy with it. All right, Paul, thanks. Thanks for sticking around. We've got lots more coming up here. Stick around. We'll be back. The U.S. Congress has passed legislation to end President Donald Trump's tariffs on Canadian imports. The vote marks a shift for the Republican-led House as concerns around the midterms loom. The U.S. president, though, is expected to veto the bill, meaning it won't become law. Restaurant Brands is out with its fourth quarter results, and the fast food operator posted revenue and profit that came in above expectations. The results were driven by higher sales across its segments, including Tim Hortons and Burger King. International sales also climbed 16%, and Restaurant Brands raised its dividend. Profit in the fourth quarter came in above expectations for Bombardier. The aircraft manufacturer is coming off a recent $1 billion deal with Vista to sell more than 40 aircraft over the next decade. Looking ahead, the company forecasts more than $10 billion in revenue while delivering more than 157 planes. Despite currently not facing any U.S. tariffs, the upcoming CUSMA negotiations could have a significant impact on the company. And to the markets right now, you can see everybody's in the green as we get ready to start the trading day. The Dow up by about a quarter, NASDAQ about 0.29, and S&P 500 about the same. Blues Canal is a sports bar in Milan that was painted red this week as it filled with Canadians supporting their Olympians. They flipped the channel to hockey and put their elbows up. CTV's Garrett Berry has more.
A friendly invasion, a sea of red taking over this Milan sports bar and making it
Man, I feel like a woman.
the unofficial Canada HQ.
This is an amazing place. I've just got a whole new room full of friends here.
What started with a few WhatsApp messages and Facebook callouts has become an act of some international diplomacy on one of the world's biggest stages.
People see my Canadian flag on my lapel, only the best energy that's given back to me. I'm really proud to be Canadian.
The Canadians are filling the chairs.
We have a lot of Olympic tickets, but we wanted to do at least have one big Canadian game where we would be with a bunch of Canadian fans.
If you see us hanging out here, come on over and say hi. We're making friends, meeting people from all over the country.
They're flipping the channels over to hockey and explaining the rules to everyone around.
I've seen the sport before, but I've never understood it. I've been educated by Jason's like offensive line and the blue line.
The Italian staff can't seem to get enough.
Love this place, Blues Canal, because we are like to building a place where people can just be themselves, bringing something from their country.
Gabriella told me that her new Canadian customers and friends are always trying to solve problems and really are just nice. Garrett Berry, CTV News, Milan.
Well, Canada has been focusing on growing national defense with recent conversations surrounding the prospect of upgrading the military fleet, the air fleet, with a mix of F-35s and Saab Gripen jets. Now, here to discuss the economic implications of having this mixed fleet is Richard Shamuka, Senior Fellow at the Macdonald-Laurier Institute. And Richard, thank you very much for joining us today.
Good morning. Thanks for having me.
All right, let's get your initial thoughts on the idea. Do you like seeing a mixed fleet? Is it something you feel can work?
Probably not. I think there's been multiple analyses done internally, externally from Department of National Defense that have shown that a mixed fleet is basically unworkable. One of the current problems that the Canadian forces have is that they have a limited number of pilots, and a transition towards a mixed fleet would severely strain what few pilots that the forces have, because when you think about actually putting together a mixed fleet, you require what's called a pipeline of pilots, which is a sort of a training system, sort of the sustainment side, and that really is a difficult proposition because you actually have a large number of people that are always they're actually not operational. They're just in the training pipeline that they're starting getting ready to fly, and the development and building of that really takes up a lot of the sort of resources. And even though that we're seeing a significant increase in the defense spending by the government, there's just not enough sort of resources that are available to actually undertake that. So that's a major concern. The second part is the capability side, which is as much as there's been sort of talk that, well, the Gripen may just be maybe better for Arctic or sort of other sort of capabilities, the reality is that it's basically a generation earlier. And while some of our allies do have what's called a mixed fleet of two different aircraft, the reality is that that they made that decision decades ago, and they're just they have a legacy fleet of old aircraft. And we're trying to make a choice here where we're going to try to employ an aircraft that is basically 20-some years old, even though we already have the next generation of fighters that we're currently using. So overall, it doesn't really make much sense, and I think that it's really been driven by sort of the political factors that are at play with the United States.
Hi, Richard. It's Paul Harris. So I think people who are supporting the Saab kind of thing is that they think there's a lot more jobs coming to Canada. Do you have any thoughts about that, or is that something that just is not something that you would consider?
Yeah, no, it's not. I mean, the way that Saab is trying to portray its job options is through what's called licensed production, and they currently utilize that with Brazil. And Brazil really only just does the final assembly of the aircraft, and it's called what are called knockdown kits, which are just sort of large portions of the final sub-assemblies that they sort of put together in country. And it only gets around 300-some jobs. Now, Saab is claiming, well, we're going to get you 12,000 jobs or 10,000 jobs based on sort of different reporting. The reality is that a lot of that is illusory. Even the whole Saab Gripen enterprise is probably around 6,000 jobs overall. So unless Canada really just wants to spend far more on this aircraft than even its current cost, which is probably around maybe around 100 million or 85 million, somewhere in there, which is more than the F-35, I should point out. The reality is that you're not going to see the job growth as what's being claimed.
Now, with that in mind, what about the F-35? How many jobs would that bring to Canada? Or will it bring any jobs other than the pilots who are flying it? But would that bring any more jobs? Which is the better one? Which one's touting the more jobs, I guess?
Well, Canada, because of the nature of the F-35 program, already has a significant footprint within the country, and that's largely because back around 1998 and then in 2006, we joined a partnership agreement that basically made Canada a sort of a licensed production center for components for the F-35. The key, for example, a company like Haru DevTech in Quebec or Magellan Air Systems, they've been producing parts for the aircraft since around 2009, 2010. So there's been a constant sort of flow of contracts, which I believe it's around $3 billion has already been sort of produced out of Canada. And almost every single F-35 has Canadian parts in it. So the reality is that there's already been a footprint in the country. It's more kind of like a supply chain model that you would see with cars or with sort of any sort of modern good. So the reality is there's already that kind of production. Now, Lockheed has stated, and some of the subcomponent suppliers have stated, that there is additional options where Canada could do sustainment activities like with L3 in Quebec. That would increase because the way that the sort of the sustainment enterprise works, you can kind of do work for other countries in Canada, like the United States. And there's suggestions there's several thousand more jobs that are available if Canada was to go with a full purchase.
So, it's Paul Harris again. So, I mean, one of the issues with these mixed things, I mean, I don't think the government's had a very good job at procurement. And we constantly hear about this stuff. It just makes it sound like they're going to have an even more difficult time having two different aircrafts, and the procurement issues are going to be much more difficult. Do you think that, what do you think about that?
That's basically the reality. In 2014, Department of National Defense did an analysis of this exact lead model, and it stated basically what you said, is that there's going to be difficulties in procurement. I think that the idea that we would kind of bring a lot of the jobs to Canada, it may be possible, but the reality is that after the production is over, Saab was suggesting that there would be around 70 aircraft in Canada. There would be no follow-through. There's no follow-on program behind that, and you would just you'd build up the facilities to assemble these aircraft, and then basically build the 70 aircraft and then shut it down. And that's really not the sustainable industry that I believe the government really wants to look at. Whereas, as I said before with the F-35, you've already seen several thousand jobs be in Canada for over a decade and a half here. And it will probably continue for at least another 15 years as the F-35 program kind of goes through its huge order book, right? So it's not really an effective, sustainable way to develop an industry, whereas that was kind of the intent behind the F-35 program and the partnership program that was built several decades ago.
And just one last question. Would the pilots be able to fly both, or would it be strictly one flies one and another one flies the other?
You'd have to have separate pipelines, so there would be no cross availability. They're generationally different as well. They don't operate the same way whatsoever. So there'd be absolutely no ability to use one to have a pilot to do both, or even what would be actually more important would be the maintainers, the people who ensure that they turn the wrenches or whatnot. There'd be no commonality between the two aircraft.
So we'd have to have essentially double of everything to maintain it and fly them.
It'd actually be more than that, just because there's an overhead number that you're just never going to get around, right? As you scale up a fleet, you can that overhead doesn't really change as much. So the reality is that if you have two small fleets, then it's not going to be it'll be completely inefficient for both of them.
Okay, we have to leave it there, but Richard, thank you very much for joining us.
Thanks for having me.
Richard Shamuka is a senior fellow at the Macdonald-Laurier Institute. Still ahead, we'll take a look at some of the notable analyst calls and recommendations moving the markets, including McDonald's. And our phone lines, of course, are open. Paul Harris is taking your questions. You can reach us at 1-855-326-6266. Email first call at bellmedia.ca. Let's take a look at one of the notable analyst calls and recommendations moving the markets today. Just one today, McDonald's. U.S. sales grew at the fastest pace in more than 2 years in the fourth quarter as value meals continue to resonate with cost-conscious diners. Wells Fargo raised the firm's price target on McDonald's to $355 from $345 U.S. and kept an overweight rating on the shares following those results. So, Paul, your thoughts on McDonald's? How's it?
Well, I think what's interesting about these, I think these stocks had a kind of a difficult time because of people talking about Ozempic or other weight loss drugs, and they're not going to
the impact it's having on other
kind of
industries.
Fast foods and stuff like that. So I think that that's one thing. I mean, I think caused issues with these companies. Also, the issue is that it doesn't mean you stop eating McDonald's. You just eat less of it, I guess, is what would happen with something like that. But I think the other issue is that these stocks suffered slightly because of that. But I think what they're showing is kind of their dynamics, their ability to create revenue and grow their business continues. I think also McDonald's did a few things where they actually kind of re-renovated their stores a little bit, spend some money on the capex side to make it feel very slightly different. I think they also, McDonald's, what they've done over the years is really kind of looked at their menu and thought about how to make it a little bit more, a better quality, better for people, etc. I think that's helped these companies out. You also saw, you mentioned earlier on about restaurant brands, and you saw Burger King do well, Tim Hortons do well. Kind of the issue is that you saw both that kind of. So you've seen this happen a little bit. Chipotle was one that I think did poorly, but I think that you've seen these kind of companies get better because I think they were the ones that got hurt the most because they kind of felt they weren't as natural or healthy for you relative to a Chipotle.
Yeah, they got painted into a corner essentially, didn't they?
Yeah. So I think a lot of these companies have done the right thing. They've renovated their stores. They've changed their menu to be a little bit healthier.
They held prices too, which is a big thing.
Yeah, and so I think that, the issue for them is
lowered them even.
Yeah, so I think for them is that they've actually done a better job of looking at their business model and how to change it slightly to prepare for something like this. But I think McDonald's is a great franchise, and I don't know, you can't beat their fries. I mean, they're the best around.
Do you own McDonald's shares?
No, I don't own McDonald's.
But you own McDonald's fries, clearly.
Right. But if you're going to have some steak frites, the best thing to do is get McDonald's fries.
Really, with steak?
Yeah, well, if you're going to have a steak and some French fries, you might as well get McDonald's fries. They're way better.
Okay. On that note there, we're going out for breakfast. Now, when we come back, Paul Harris, portfolio manager at Harris Douglas Asset Management, will take your questions on First Call and how to mix steak and McDonald's frites. Time now for First Call and first email, actually. This one's from Alex, and short and sweet. Your thoughts, please, on Apple.
Yeah, so we've owned Apple for a long time. We like it. I think that you saw that their phone numbers were off the charts on their new phone. I think the interesting thing that people are worried about Apple is the fact that they're not spending this kind of money on AI and how they integrate it. Everybody else is, which to me is kind of interesting because maybe Apple feels this AI is going to be commoditized and it'll be very easy to get what they want down the road from somebody else in a similar way that they pay Google to be on to be their browser, right?
And they do have lots
Google
of cash
pays them
sitting there, don't they?
Right. Yeah. So to me, I think Apple may be doing the right thing in a world where everybody's spending a lot of money. They can pick and choose who they want to be with, and how they want to develop AI. So it seems like people feel it's going to hurt them, but maybe they're playing the right move down the road, right? So,
what kind of dangers could there be with sitting on the sideline for this?
Well, I mean, people will say like, they're nowhere close to getting to those levels where they can really use AI for a lot of the things they do on their phone, right? So, but I think that they will be able to kind of integrate those things a lot faster than people think. But that's kind of the bet you're taking, I think, with Apple. They're not going to spend this kind of money until they see how it plays out, and they may be in a better situation to go and do the right things. But their phone, clearly there's a great demand for their phones. I think that'll continue into the rest of the year. And their services business continues to do very well. So I think Apple's in a good spot. I mean, I think that they're not doing what all these other AI companies have to do, or they feel they have to do.
Any concern that there may be the delay of Apple Intelligence 2.0?
I don't think so. I mean, I think, Apple's always one of these companies that wants to, when they release stuff, to make it absolutely perfect, right? Until they feel it's right for them to do that, that's when they do all these things. And if it's not, I think they feel that they're not doing their clients a service, right?
Yeah.
So they want to be able to make sure that the product is working effectively, integrating well. Apple was one of these first places where you got a product, you turned it on, and everything worked.
Yeah.
Right.
They did sexy well with it.
Yeah. So it was just like, so I think that their mentality about a lot of this stuff is that we're going to put this for our clients, but when we turn it on, it has to work perfectly and integrate with everything they own. Because a lot of people who own Apple phones have Apple computers and all these other things. So they want that integration to be really very simple. And so I think that's the issue for a lot of this stuff, right? So I think that if it's right, they'll do it. And I think the phone thing is giving them a little bit of leeway down the road, because I think there's going to be this kind of constant upgrading of phones over the next, 6 months to a year.
All right. Okay, let's move on to, it's a very nice little Canadian company right now. Bombardier is kind of firing on all cylinders, isn't it?
Yeah, it wasn't for a while,
but
right?
Seems to be.
Yeah, so I think that, they are. That's great. I mean, I think one of the issues that they faced was that Embraer, which was their really
Hang on, I got to interrupt. That was an email from Jack. We just went straight into Bombardier, but that email was from Jack asking about Bombardier.
Right, so
thanks, Jack.
Yeah, so that's the issue. I think they had this kind of issue where their jet was not as great as Embraer, and they've really concentrated and made it better, and I think they've seen a better growth in that area. And you saw when you were talking earlier on the show that they've got a bunch of orders, their backlog has increased. I think it's been very good from Bombardier. I think one of the things I've never liked about the company, and this is just my little thing, it's really a Quebecor type, Quebec Inc. kind of company, right? It's really supported by the government there, which is great. But Bombardier has done a great job of, bringing in better management, executing better on a lot of things. I think their jet program was a disaster, right? And that's why they had all those problems. So I think they've sorted all that out. And you can see that with orders coming in, and they're doing better with all these other things. So I think that's a great sign for Bombardier. I think their execution was very poor, and so now it's much better. And I think you're seeing that in their stock price, and you're seeing it in their numbers that they're reflecting.
And I must say something, making this announcement amidst of all this tariff issues and possible decertification and the Trump's threat of, and they're still announcing those deals.
Yeah, so I think they're on a very good sweet spot right now.
Okay, let's get in another email. This one's from Nick. Can you explain how AI impacted Cisco's latest earnings?
Well, I think the issue with a lot of this stuff is the kind of pure impact of AI is hard to explain in everybody's thing. But I think what's happening with a lot of these companies, AI is slowly being embedded into everything they do. Mm-hmm. So in one way, from a company perspective, from a corporation perspective, AI is probably reducing their costs of coding and all those other things that they have to do for the software part of their business. So, and you're seeing that where people are going to continue, maybe not hire as many people, but they may be laying off people. And I think you saw that with Amazon. You're probably going to see that with a lot more tech companies as they embed it into their business, right? So the corporation side of the business, the product side of the business will continue to be integrating with AI. The issue with all this stuff, though, and I think that we've seen it with sort of like I mentioned earlier, these software companies. Well, like the problem is that if you're a company, you're just not going to go use an AI product because there's a lot of risk on it on the security side, right? So, you're just not going to give up and say, oh, I'm just going to use this product because when you think about someone like Microsoft and or even Apple, or how many security things that they've done over the years for your phone and all that stuff, those things are really important, right? So security is going to be very important if you're using a product that you just get off the shelf. Yep. Most people can't do that. A bank can't do that, right? So that's the issue, I think. So
I got to wrap you up there,
okay.
Paul. We're out of time. But thank you, as always, for joining us. Paul Harris, Portfolio Manager at Harris Douglas Asset Management. Lindsay Biscay is up next with The Open, and the market's open in about 30 minutes. Have a great day.